Hi, and welcome back to Stop Being Sold. My name is Michelle, and I'm here with Brian. And in today's video, we're discussing whether or not CDs or certificates of deposit are the best way to save right now. We've got interest rates rising higher, and let's face it, the level of uncertainty about markets, people are feeling a little nervous, and they're looking for a safe place to stash cash and earn interest. But my question to you today, Brian, is are CDs the best way to save right now?
Yeah, rates are definitely moving higher. But before I answer that, it's important to understand the basics of a
Sure.
CD or
Okay.
certificate of deposit, right? CDs are just a savings tool offered by banks and credit unions that are FDI insured up to $250,000 per account. Because of this insurance, Michelle, they're considered pretty low risk. So
Sure.
basically, you're putting their money into this savings tool for a specific amount of time in exchange for a fixed rate of interest. They pay higher rates than in savings accounts, definitely higher than savings account.
Yeah.
And mainly though, because Michelle, you're locking up your money for a specific time frame.
Right.
You can see CDs go from 3 months up to like 10 years in duration. And normally, what you would see, the longer the term, the higher the interest rate.
Sure. So in the payout from a long-term CD, I know can be enticing, but don't people need to be aware of you have to lock your money away for a long time if you do that sometimes, right?
Sure,
Which
sure.
can be an issue for some people. So while it sounds really good right now, if there's some sort of financial emergency that comes along and you need to get your money, tapping your CDs, you can do it, right? But it's really costly.
Well, it's costly, just like anything else. If you surrender something
Sure.
early before the end of the term, you're going to pay a penalty for that. So, you can also lose money if you go back on your bargain with the bank and withdraw your money early.
Right.
Basically, the
Okay.
rules vary, but generally, you have to pay a penalty equal to a chunk of your interest. But that brings us back to the question you asked me: are CDs the best way to save right now?
Yeah.
Yeah, they're not right for you if you don't have an emergency fund. It's that simple. Okay, let's start there first. In fact, once you've maxed out your emergency fund with, let's say, roughly 6 months of expenses,
Sure.
then a CD may be an option for you. But if you got additional savings and would like to earn higher interest rates than what the regular savings accounts are paying, it's definitely a better option than a high interest account. So just remember, you'll
Okay.
be locking up these funds for the duration of the CD that you purchase.
Mhm.
Another thing to be cautious of is while CDs are becoming more profitable, that still doesn't make them the best tool for growing your money. I'm currently seeing 3.5% for 1 year right now. So rates are finally moving up, but locking your money up in a CD with a 3.5 interest rate won't make you wealthier when we're still at 8.2% inflation today.
Sure, but it is still better than A, leaving cash in a bank, and B,
Right.
quote unquote, I do those quotes around this, that those high yield savings accounts, which are, you know, not even at 1%, some of them, right?
Yeah, we're starting to see some of them move up also. But also, Michelle, you got to look at there are other types of CDs out there other than the traditional fixed rate CDs.
That was one
Um,
of my questions. Like, I know that there are traditionals, but there are some that can make you more, correct?
Right, right. Yes, there are. Think about variable rate CDs. They pay you an interest rate that can go up and down throughout the life of the contract. So it adjusts as the market adjusts, right? And then there's other ones called bump CDs or bump up CDs. These allow you to ask for a bump up in your rates before the CD period ends to take advantage of the rise in rate period. I don't see them as much anymore, but they are still out there. So.
Okay. All right. So I have two more questions before we wrap up this video. But before we get there, if you like the content of this video, hit that like button. Do not forget to subscribe. We put out videos, numerous videos weekly on everything from protecting your money, saving for retirement, and what else, Brian? Social Security, 401ks, you name it. So do
Breaking
subscribe.
news,
Yep, right,
Congress.
breaking news. Exactly. All right. So here's my question. Next one is how are CDs taxed?
Oh, great question.
Important question.
Normally you see CDs in non-IRA accounts, but sometimes you will have IRAs. So if it is an IRA, Michelle, it's going to be taxed as normal income as you take it out. And don't forget the under 59.5, 10% penalty for taking funds out early from your IRA. But most of them are seen as non-IRA accounts, and they're taxed annually on the interest earned. Here's the key, though. It's whether or not you take the funds out or not. Okay.
Interesting. Okay.
So let's say it's today, Michelle.
Okay.
October 15th, whatever it is, middle of October. And you've got a CD that matures middle of January. Well, at the end of the year, guess what? You're going to get a 1099 from your bank for the interest that you earn from now till December 31st.
Got it. Okay.
And you didn't cash in your CD. Help me out here on this. I'm not a fan of that, because why would you pay taxes on something that you haven't actually reached its maturity date yet? Not a big fan of that.
So just to make sure I really understand this. So if you have, let's say you have a 10-year CD, right?
Mm-hmm.
Each year you're going to get a 1099 for the interest.
For the interest earned.
Okay.
And you never received the funds yet. I don't like it.
But when you take it out at the end of the 10-year period, you're not having to pay 10 years worth of interest.
No, you just pay that last year of interest when it matures, whatever you received in the year that it matured. So,
okay. All right. So really what I got out of this video is, with rates rising, CDs could be, I should say, right for people who are able to lock their money away, because they also have emergency cash sitting on the side.
Sure.
Right. And anyone who's wanting to, nothing is without risk, right? But these are they're much safer than.
Yeah. Some advisors will tell you, 3 months is all you need in emergency savings. I like to go a little overboard, because I like to go 6 months. You figure 6 months of mortgage payments, 6 months of this, your car payment, whatever it may be, put it back, because God forbid something happens where you can't work for 6 months.
Yep. Life happens always.
Yeah, life happens. So, these are right for the people looking to make more than savings accounts are paying, which are horrible right now. And as long as you have plenty of money set back for an emergency, that has to be your number one priority.
All right. Awesome. Well, thanks for this, Brian. Listen, we're going to put a link in a video below called "Is It Time to Buy a MIGA?" right now. And it will be
that's a perfect follow-up.
Favorite time. It is. It actually is. Do go check that out, because MIGAs and CDs, people are often like, what's the difference? So it's in the description below, and it is also in the pinned comment. And while you're at it, don't forget to like this video, help us grow this channel, and also subscribe. Brian, you got anything else before we wrap up?
Just to follow up on what you just said, if you like this video because you're starting to see CD rates starting to rise, wait till you see the video on the MIGAs and see the difference in the interest rates inside MIGAs right now. You're going to be pretty surprised.
Okay. All right. Well, thank you, Brian. And thanks to everyone who watched. Until next time.